Hello again, everybody. Doing here from DRFX, Forex Swing Trading. The pound Japanese yen has an interesting setup that is similar to the setup that we saw on the pound Canadian dollar, which we traded a couple of days ago. Here we see on the daily chart of this pair that the market has been in a very strong uptrend since 2012 and has created these two trend lines, the inner uptrend line as well as the outer uptrend line. Now, what you'll also notice about this trend is that based on the patterns that we're seeing at this area here, it appears as if the momentum has basically slowed down and that we are about to embark on a trend change over the next couple of months. Here you see that this sideways movement that has taken place and that has led to the break of this inner uptrend line is basically taking the form of a bear crown setup. Here we see that this area would essentially be the left tip. This area here would be the center tip, and the pennant consolidation, which we'll take a look at a little closer in a little while, is basically forming the right tip of that bear crown formation. So assuming that this bear crown formation is going to be completed, it would lead to a break below this outer uptrend line to essentially start a strong and new downtrend in favor of the Japanese yen. So that is the bearish possibility that we're seeing for this pair right now. Now, in terms of the bullish side of things, what you'll notice across the currency market is that as long as we are still above the trend line that is defining the direction of the currency, there's always a chance that the market will resume the original direction. So even though we have a bear crown setup that is formed at this area here, it is always possible that the market could continue the existing trend as long as a trend line is still being held, is still holding. So let's take a look at that bullish possibility with a closer look at this pennant formation. Here you see this pennant consolidation has been formed just below this inner uptrend line, and right now the market is below this support point, the support boundary, which was broken a couple of days ago. Now, even though we have broken below this uptrend, this support boundary, and we could be headed towards the outer uptrend line, it is always possible that the market could provide us with a reversal signal that takes us back inside of the consolidation. This will be what is called a false consolidation breakout, and it's something that is very common across the currency market. What you'll find is that when the market appears as if it's going to be breaking out at one end, it suddenly provides us with a reversal candlestick formation that takes us back inside of the formation. A recent example of this took place with the pound Canadian dollar, which was traded a couple of days ago. Here we see a pennant consolidation setup where the market initially broke the support boundary with a strong bearish candle, which initially gave us indication that the market was going to be heading lower. But soon, right afterwards, the market provided us with this reversal signal that started the movement back inside of the consolidation and a breakout above the resistance boundary. This then started the reversal, which took the form of a very sharp reversal and a sharp movement towards the other end by several hundred pips. This allowed us to take advantage of it, since the overall setup was in sync with the strategy that we have for trading these types of movements. So this was able to provide us with a strong gain of 140 pips. Now, this signal that you see here that started this movement is a very common signal that you see across the currency market when it comes to consolidation breakouts. This is essentially when the market provides us with a reversal candle in the form of a bullish engulfing candle, or in the case of a downtrend, a bearish engulfing candle that starts a reversal that takes us to the other side of the consolidation. So this setup is one of the examples of how the market can provide us with these false reversals. Now, there are other types of signals that we will see across the currency market that can also start these reversals. And in particular, there are three other types of signals that you will see. And once you were able to identify, once you know what those are, and once you're able to spot them, then you can take advantage of them and trade them. In terms of what we could see here, we could see a similar reversal candle that starts a reversal similar to what it did with the pound Canadian dollar, or it could take the form of the other three types of candlestick formations and candlestick setups that lead to reversals as well. So even though we're below this consolidation, we have not really started a strong breakout, and we're still pretty close to the support boundary. So the market technically can still provide us with a setup and a signal that takes us back inside of the consolidation and above the other end. So that is what is possible in terms of the bullish scenario that could actually start the movement that resumes the overall uptrend. So over the next couple of days, we're going to wait to see what the market provides us in terms of a signal at this area here. It will either provide us with a bullish reversal signal that takes us above, or we could actually see the market break this trend line in keeping with the head and shoulders bear crown pattern that is now taking place. So next couple of days, we're going to have to wait to see what the market provides us in terms of a signal. And then once that signal and setup, once those signals and setups are in sync with the parameters of one of our 5 swing trading strategies, then we can take advantage of it. So until then, until we see a good signal and setup, we're gonna have to be patient and wait for the market to provide us with an indication of what it is going to be doing over the next couple of days. So until then, take care.